Is the era of dollar dominance at an end anytime soon? Good morning to you.
Hey, good morning. Thanks very much for having me on the program. Well, it's definitely a question that investors ask quite frequently. I mean, over the past couple of decades, there have been many iterations of, the argument that the era of dollar dominance is behind us, but the dollar is still very much the majority reserve asset in when you look at global FX reserves and the key currency for international trade. So the dollar dominance certainly hasn't ended yet, but many people will be asking, has anything changed as a result of the sanctions that have been put in place against the Central Bank of Russia? It sort of undermines the idea of a safe reserve asset denominated in US dollars. And possibly other reserve managers will be thinking about diversifying out of the dollar. But I think we should be a bit careful about drawing too many conclusions about this being the end of the dollar's dominance, because, actually the right question is not so much could the US authorities freeze the assets of any particular central bank. It's more, could any authority or jurisdiction freeze the asset of the reserve assets of the central bank? We have to remember that the Europeans have taken action, so have Japan, so has Canada, many countries have. And so I think actually when you think about it in that way, you have to think about what is the safest asset and not so much where is there any safe asset left, because I think that concept of a safe asset has been sort of undermined now. And it may well be for many reserve asset holders that the dollar remains still the safest asset around.
So, again, big headlines yet again on the relationship between Asia and the Middle East, and the fact that the Saudis may or may not accept yuan-denominated payments for oil as well. Is it possible that EM and South-South trade will actually at any stage realistically give up the dollar, James?
Well, I think that news from Saudi Arabia is interesting. Clearly, if Saudi Arabia was to start receiving renminbi for its oil payments, it would have a lot of excess renminbi that it would have to do something with. I mean, it could well park those renminbi in reserves, but they also have a lot of imports to make from other countries, and they may well convert that renminbi into dollars and euros anyway, because that is what is most useful for conducting international trade. But I think it's possible that if you have a decent chunk of your trade being denominated in renminbi, then yeah, I mean you can see a little bit of diversification away from the dollar and into the renminbi. And actually, we do have a long-standing forecast of ours to see the renminbi as a share of global FX reserves rise to somewhere between 5 and 10% by the end of the decade. I mean, it stands at around 2.5% now, so there's some way to go, but news like this does suggest that you can see a little bit of reserve diversification. But again, it's only a little bit. The Saudi Arabian monetary policy is that the currency is pegged to the US dollar. We don't see that peg changing anytime soon. And so diversifying significantly out of the dollar doesn't seem very realistic.
James, can I ask you then where you think there may be opportunities in emerging at the moment? I mean, it was interesting looking at how the Brazilian authorities have hiked rates again there. We're talking about 11.75% on the Selic at the moment, but that doesn't seem to be providing a whole host of support for the real. And I think we've seen the Mexican peso also having a few wobbles of late in trading sessions. Where is the opportunity in FX at the moment as everybody's having to react to the Fed?
Yeah, so I think the cleanest outcome from the Fed is actually to just be long dollar yen. This is dollar yen is a currency pair that is quite sensitive to how US yields behave, and the Bank of Japan is clearly not moving anytime soon. I mean, the Bank of Japan is possibly got the most dovish monetary policy of any central bank that we cover, and so there's a substantial amount of policy divergence there, and I think dollar yen is understandably moving up on the back of that. It also benefits, we think, from safe haven demand. The yen is famously a bit of a safe haven as well, but the dollar is very much a safe haven. And when you have that much higher level of yield being offered in the US, it's arguably a more attractive safe haven. So when you get geopolitical tensions coming through, I think actually dollar yen can remain very resilient. The difficulty for a currency like the real is, yes, the BCB is hiking, but you have the Fed hiking as well. So it's not clear that there's a very obvious opportunity there. Currencies really thrive off of policy divergence, and for us, dollar yen is the best expression of that. The other problem for BRL is that actually so far this year it's been a fantastic performer. LATAM currencies in general are some of the few currencies in the world that have actually gone up against the dollar this year. And I think as a result of that, positioning from investors is actually quite long the real already.